Welcome to Coin World. Today, we're diving into 5 undervalued crypto tokens that analysts believe could deliver explosive returns of 50x to 100x in the current market cycle. If you're looking to capitalize on emerging blockchain technology, now is the time to take note. Don't forget to subscribe for more crypto insights. With fresh optimism in the crypto market, institutional investors are eyeing affordable yet highly liquid tokens with strong technical foundations. Solana, Polygon, BNB, Sui, and Avalanche have captured attention for their expanding use cases across DeFi, NFTs, and enterprise solutions. Solana is making a comeback as one of the fastest smart contract platforms. Known for its high throughput and low transaction costs, it's cemented its place in DeFi and gaming. Despite past network issues, recent updates have boosted reliability. Analysts highlight its transaction speeds as a key advantage for exponential growth. Polygon is evolving beyond an Ethereum scaling solution into a Web3 foundation. With giants like Disney and Starbucks using its infrastructure, it's a standout for long-term growth. BNB remains central to the vast Binance ecosystem. Its deflationary tokenomics, continuous burn mechanism, and broad applications make it relevant for infrastructure plays. Sui introduces a novel object-based data model developed by ex-Meta engineers. Though early stage, its innovative framework and venture backing hint at a promising trajectory. Avalanche's subnet technology allows custom blockchain deployment. Its partnerships with financial institutions for asset tokenization make it a top choice for scalable infrastructure. Have you invested in these tokens? Let us know in the comments below. We're eager to hear your investment stories. These tokens feature distinct technical strengths and expanding real-world applications. Despite current undervaluations, their potential is vast. Thanks for tuning in to Coin World. Like, share, and subscribe for more updates on the dynamic world of cryptocurrency investing.